great day, Caesar. Caesar Capital. Hope you're well. It's the 23rd of June, 2024. And I'm going to do a little short presentation for you today. And I am going to argue the case for a summer rally of 2024. Now, I'm not necessarily saying that this is definitely going to happen, but I think that there is a lot of bearish sentiment out there at the moment. And technically speaking, we are, not very far at all from all-time highs, which are trading around, I don't know, 64K or something like that. So in my view, there's no need for this severe bearish sentiment. And actually, when you look at the data, there is actually an arguable case that we could rally through July and August. Now, as I say, I'm not saying this is absolutely going to happen. I'm not making a call on this, but I just think that there is a good arguable case to suggest that we could have some fairly decent upside, maybe not parabolic upside, but some fairly decent upside through the summer. Now, I completely get the case of us potentially just chopping about sideways through the summer, and that, that kind of makes sense to me as well. But I think also when you look at the data, I think that there is really a case worth putting forward, as it were, for there to be some fairly good upside during this summer of 2024. I wrote an article on this yesterday, which you can read on Twitter, but let's try and put some flesh on the bones of that article. So the first thing is this, is that I see a lot of seasonality charts saying, that we're going to chop around during the summer, maybe we might lose some steam, etc. Completely accept that. But those seasonality charts don't take into account, or they don't isolate really the position we are in now, because we are after a halving. So we are approaching Q3, 1st of July. So July, August, September will be Q3. And when you actually, if you isolate those Q3, for example, or July and August after a halving, the results you get are quite different to the seasonality chart that a lot of people are throwing around on Twitter. Now, I'm not trying to poo-poo the seasonality chart. All I'm trying to suggest is that sometimes you need to isolate data. And if you isolate data, sometimes you get a slightly different outcome. So if you actually take a look at Bitcoin's performance during an uptrending market, so during a bull market and after a halving, most importantly, Q3 is actually pretty good for Bitcoin. And July and August have actually brought, on average, after a halving in an uptrending market, an average of 37.28% return. Things aren't actually that bad. And actually, then when you look at the data further, only one out of 5 of those periods of time have actually been net negative, and that was here in 2016. But actually, there's an argument to say that Q3 actually began a little bit before the halving, a week or 2-3 weeks before the halving, and then of course there was that the usual halving kind of sell-off. But anyway, I included that in the data, and you can see how I've marked it out here. This area back in 13, this area in 16, another area in 17, this area in 2020, and then this area in 2021. And the average return from all of those, including this area in 2016, which was net negative of minus 6.6% or something like that, the average return is 37.28% for July and August. So that's pretty good, really. And that doesn't mean that we're gonna have some volatility to the downside. But if this data is anything to go by, Bitcoin will be trading, or should be trading, by the end of August, beginning of September, around about $82,500. That would be a 37.28% move, assuming that we hold a 60K support. So from 60K to 82.5 is around about 37.28%. So actually, that's pretty bullish, if you ask me. And this is me isolating the data. So whilst, again, I accept we could have a bit of a choppy summer, when actually looking at the data, all of the quarters, or the Q3 quarters, as it were, or the Q3 quarter after a halving, have been really quite bullish. And in particular, the return for July and August haven't actually been that bad. And I'm just isolating that as the summer months, because of course the case is for the summer rally, right? And as soon as we get out of August, we're sort of heading towards autumn. But yeah, so July and August, 37.28%, which, actually isn't that bad. So the data suggests that 1 out of 5 times will have a net negative Q3, or July and August, but 4 out of those 5 times, it's actually been net positive of 37.28%, and you can see that quite clearly in this chart. The other point as well, which I think is quite important, is liquidity, because at the end of the day, liquidity drives markets, particularly risk markets. So liquidity is essentially like a tide. It ebbs and flows. And the economy, or risk assets in particular, contract with liquidity. Now, obviously, there hasn't been a huge amount of liquidity sloshing around in the system at the moment. But you can see here that M2 liquidity is actually now beginning to tick up. So that's positive, because when liquidity becomes positive, when there's, when liquidity starts to rise, so do risk assets. And looking at M2, obviously M2 is important because that is the cash, as it were, sloshing around in the system on central bank balance sheets and bank balance sheets, etc. But what's also important is to consider global liquidity. Now, if you want to learn a lot about global liquidity, I suggest you read Michael Howell's book called Capital Wars: The Rise of Global Liquidity, because you'll learn quite quickly that liquidity isn't just about cash, okay? It's not just about M2. Liquidity is a lot more than just cash. It's money markets, it's credit and debt markets, etc. And you will quickly find, when you look at the Global Liquidity Index, you can find it on the Financial Times online, that in fact, a lot of the time, when global liquidity is at a peak, so are risk assets, and so is Bitcoin. And when global liquidity is at a low, so are risk assets, and so is Bitcoin. And you can actually go and take a look at that, and you'll quickly find that actually the lows of global liquidity pretty much match within a month or two the low of Bitcoin, and the highs of global liquidity pretty much match the highs of Bitcoin, and indeed the S&P 500, NASDAQ, etc. So risk markets. So global liquidity is increasing. It's very much connected to the cycle of debt, and the cycle of debt is about 4 to 5 years, which, interestingly enough, so is the cycle of Bitcoin. You will quickly find, as I've said a moment ago, that global liquidity is very much linked to risk markets. So global liquidity is increasing. M2 is increasing. So that's, always positive for risk assets. If we were sort of here on a downtrend, I'd be concerned that, global liquidity is decreasing. But in fact, global liquidity bottomed out in around about November. Global liquidity bottomed out around about November, December 2022, which obviously coincided with the bottoming out of the NASDAQ, the S&P 500, and indeed Bitcoin. So global liquidity is on the rise. As I said, if global liquidity was dropping, I would be concerned, but it's not. It's in fact increasing. So that's very positive for risk assets. And global liquidity, if global liquidity continues to increase, which I think it will, then that will give a good push for risk assets, including Bitcoin. Now, this is one of the stronger arguments, I think, in this case for a summer rally. And it's the US elections, and it's the impact that the US elections has on risk assets. And this chart by Carson is an extremely, good chart. It's really, really good when considering what happens during US elections. Now, what this chart has done is it's tracked US elections into Memorial Day, then through summer. And this goes back averaging on the S&P 500 during election year since 1950 to current. And you can see that there is this choppy area during Q2, basically, which is pretty much exactly what's been going on for Bitcoin. It's chopped about, but then you can see once we get out of sort of, midsummer and start pushing in towards the summer, particularly July, you can see here, there is a movement to the upside. So you can see that the S&P 500 basically trends nicely to the upside pretty much from June through to the end of September, beginning of October, when there's a little bit of a sell-off. And then once the election result comes in, then there's usually a good continuing rally to the upside. So that really lends favor, doesn't it? It's a sort of a tailwind, certainly not a headwind for Bitcoin, that risk assets during the summer months, during an election period, tend to trend to the upside. Well, they do trend to the upside. And I think that's going to have a positive impact on Bitcoin. And I think that with, the juice coming back into the system, usually in around about July for liquidity, this will have a net positive impact for Bitcoin and could cause the price to, to start grinding to the upside. Now, the next thing is this, it's the miners. And obviously after every halving, miners capitulate. Why do they capitulate? Because, of course, the block reward halves, and they're, getting only half the amount of Bitcoin as they were the day before. And what miners usually do going into a halving is they start to sell off because they know, what's going to happen. They know that the price is fairly high at the moment, or that point when they're selling, and they know that the block reward is going to decrease by half come the halving period. So what the miners tend to do is they start to sell off prior to any halving and into a halving and after a halving. They essentially capitulate because, miners have got to keep things going. They've got to have some cash in the system to pay the bills, to pay their staff, etc. Mining is, in fact, an extremely difficult game to play. And it's a real dog-eat-dog world, really. And the only way they can survive is by selling Bitcoin, right? So what happens is before the halving, they start to sell off. And you can see here in November 23, they were selling off, they were selling off, they were selling off, and they're continuing now to sell off. But you can see how the price has increased here. And the miners, this is the balance in miner wallets. You can see that the miners are just, the balance of their wallets is decreasing while the price is increasing. And that's a real divergence there. And what's happening here is the miners are basically capitulating. And there is going to be a point where the miners aren't going to have many Bitcoins left to sell. And I think that we are approaching that point because of this huge divergence between price and balance on miners or miner balance sheets. So this is really actually quite bullish for Bitcoin because I think the downward or the sell, a lot of the sell pressure in Q2 has been miners basically selling in to this fairly high price and selling coins that they had mined either some time ago or last year or whatever, or recently, but certainly they are now capitulating, which is extremely bullish in my view. So this capitulation will end at some point, but to me, this huge divergence now between price and miner wallet balances is quite astounding and indicates to me that it's now towards the end of that capitulation. So that's very bullish. The next thing is this: it's the general setup of Bitcoin at the moment. The first thing I'll say about this setup is that there are so many bearish people out there. There are so many people in quite a high level of fear, thinking the top is in, etc., etc., which is obviously always bullish. But this setup looks pretty good to me. Because if you actually look, now I'm not saying for a moment here, we're going to look at the RSI, and I don't want to say you should just rely solely on an RSI, because there's an old adage, an RSI can remain overbought or oversold longer than a trader can remain solvent. But this, just for this setup, it's quite interesting, because if you look at where the RSI now is on the daily, the RSI is basically about 35.39. So it's in a very oversold condition. And if you actually look back in history, back to September of 2023, the RSI was in fact at 35.39 at that point, and the price of Bitcoin was 25K, right? And then we have a higher low, so, you know, capitulation there, higher low forming, coming down to 38K 600, and the RSI was at the same spot. Then we have another higher low at 56.7, RSI at the same spot. Now this could potentially be the next higher low of around, you know, 64, 63K, whatever it might be, the RSI being at the same spot at 35. So my point is this, is that the RSI is at the same spot it was at 57K or 56K, the same spot it was at the previous high low to that at 38K, and the same spot it was at the first high low back in September 2023, when the price was trading at 25K. So we've made these high lows, and the RSI is now back down to where it was at the point of each of these higher lows. And that's fairly significant for me. You know, we are, in my view, in an uptrending bull market, and therefore the RSI is indicating to me that we are very, very, very oversold, and there could be a pretty decent bounce coming, and that bounce could begin in July, because July is literally just a week away. So we could have a little bit more of choppiness for a week or so, but then we could have a decent bounce, which could fuel sentiment a little bit more and could push the price higher past these highs of 74K. The other interesting point about this price point of around 64, 63, 64K is the short-term hodler realized price. This is a really good metric when looking at on-chain data. I think it's kind of, you know, one of the most, well, not the most important, but certainly one of the most interesting ones, which has been historically quite accurate. And the short-term hodler realized price at the moment is 63.9, basically 63,971. So pretty much almost 64K. And when you actually look at the short-term hodler realized price, you will see during bull markets or uptrending markets, the price likes to usually stay above it. You can see here in the first bull run, price stayed above it, below it, into a bear market, got above it, continued to act as support throughout that bull market, except for here. Then you had the high in 2014, then coming down below it. Then we found the low, and then it kind of hugged the short-term hodler realized price all the way through this bull market, just creeping below it slightly here and here. but hugged it nicely, it acting as support, then dropped below it, coming down for its low. Then our the bull market in 2020, again, the realized price or short-term hodler realized price hugged its price all the way up until we dropped down below it slightly and then came up to make our final high. So we've been hugging this. We can see here we've been hugging it now for quite a considerable amount of time. We did drop below it for a short period of time, but generally speaking, the short-term hodler realized price usually acts as a nice sort of support area and is definitely a good area for anyone who's looking for an entry point of Bitcoin, because generally speaking, once it gets to that price point, it does act as a nice support. And we're sitting right on that at the moment. Okay, so we've got this kind of set up on the RSI. We've got the short-term hodler realized price as well, which is confluent with that. And there are various other indicators as well, like the bull market support band, which is also confluent with that. But also, we've also got this, nice looking inverse head and shoulders as well. So it's a nice chart pattern. It's a nice bullish continuation pattern. I've done a video on this. It's my last video I did. So if you want to look at the 3 bullish patterns I see for Bitcoin at the moment, go back and look at that video. But all in all, I think with the short-term realized hodler price being at 63.9 and the setup looking good, the miners capitulating, the US elections having positive impact on price for the S&P 500 during that time, the fact that global liquidity is on the rise, M2 is ticking up, and the fact that when you look at the data of the months of July and August after a halving, the only 1 out of 5 times has it been net negative, 4 out of 5 times it's been positive, and the average of that being 37.28%. It would not surprise me if Bitcoin was trading around about the 80,000 to 82,000 mark come the end of August, beginning of September. Now, as I said, I'm not saying that that is exactly what's going to happen, but I think that there is an arguable case for this to happen. And hopefully now you can see why I'm thinking that, because of the data that I've produced today. Again, it's not a guarantee. Whether Bitcoin does this or whether it doesn't, I still think that Bitcoin will likely be trading around about the $100,000 mark by the end of Q4 2024, beginning of Q1 2025. But either way, I think that there is certainly an arguable case that we could have a summer rally this 2024. Thank you very much for listening. If you want to join our group, then check out the link in the description. Have a look at our website. You can either DM me directly on Twitter, or you can email us through the website. Hope you enjoyed it. Like and subscribe. Thank you very much for your time, and I shall speak to you again soon. Take care. Bye-bye.